I think that when this debt bomb blows, it'll be worse than 2000 and worse than 2008, maybe even worse than 1929. And I'll walk you through why. So in the year 2000, the peak was 278 billion, and the 2007 peak was 381 billion. Today, it's 1.53 trillion. That's roughly 4% of the entire US economy, a bigger share than either of those previous peaks. The selling is also faster now. 2008 unwound over months of humans making phone calls. Today, leveraged money gets liquidated by machines inside of an afternoon. It's just instant. And the market underneath it is more crowded than it was back then. We all know how overheated the AI trade is. I mean, 10 stocks now make up 43% of the S&P 500's market cap. And this whole bubble is propped up by this 1.53 trillion that I keep talking about. So when we combine all of these factors, I truly believe that when this margin debt bubble pops, it will be worse than 1929, 2000, 2008. I've already said that a million times. Now, look, this doesn't mean that there'll be another Great Depression or a massive recession that lasts for decades. That's not what I'm saying. Although it can happen, we can't rule it out completely. But what it does mean is that on the low end, we could see a drop of 50% on the S&P. On the high end, 70 to 80% is on the table. But you see, this should excite you if you know what you're doing. It shouldn't really be scary. I mean, I love the idea of a 70 to 80% crash, because it's going to give me an opportunity to buy stocks very, very cheap. Now, we need to talk about how you end up in the group that's buying and not the group that's being absolutely liquidated. But first, let me argue against myself a bit, because I'm not here to just give you one side of the story. I want to talk about what if I'm wrong. So there are a few things that say that this might not be as bad as I think it is, and we should really consider this before we plan for how to protect ourselves, because we have to understand the best and the worst case scenario. That's how investors think. They consider the best and worst case, and then they make a plan around those. You don't plan just for the best case, because that's dumb. You don't plan just for the worst case, because then you're never going to make any money. So let's look at the best case scenario, because we looked at the worst. So there's a measure where this whole thing looks a little bit less scary. When you look at the margin debt as a share of the entire stock market's value, that way margin debt is about 2.2% right now, and the 2000 top was 2.3%, in 2007 it was 3%. So relative to how big the market has actually become, the borrowing isn't at record levels yet, and that's a fair counter argument. It might mean that there's still room left to run before this thing actually peaks. But that's also scary, because the bigger this pile gets, the more violent the forced selling will get. So, it's not necessarily a good thing. Second thing, there's no real timer on this. The borrowing peaks, then the market tops. But we can't know when the borrowing actually peaks. It could be this month, it could be next month, it could be a year from now. We don't know for sure. But this is why you'll never catch me saying that the market is for sure going to crash on a certain date, or that I'm selling everything, because I'm not. Trying to time the market is an all-in Chad kind of move. That's not us. What we're doing is we're recognizing the danger, looking at the best case, the worst case, and creating a plan. Now, the third thing is that the last time this fired in 2021, the aftermath was a 25% bear market. I mean, a 25% drop is harsh, but it is survivable. It's nothing too serious these days. And maybe that's all that's going to happen this time when it pops next. Totally plausible. I think it's going to be worse, but maybe I'm being an alarmist. What do you think? Let me know. Quick thing before you go, I've written a free guide called How to Retire Before 2036. It's a full 10-year plan for anyone starting late. Get out of debt, invest properly, retire on time. Free download, link in the description.